Another stock that we'll be watching out for today is SBI. Now, it is going to report its numbers, and let's take a look at what kind of preview is the street expecting as of now. Now, it's likely going to be a soft quarter for the banking major, for the PSU. Now, net interest income, that is expected to come in at 41,229 crore rupees. That's just about a 1%, lower than the same period last year. Profit too is expected to take a hit of about 5.1%, expected to come in at 17,380 crore rupees. NIMs, in fact, they are likely to come in at 2.86%. That's compared to 3.14% in the same quarter last year. On the other hand, PPOP, that number is expected to come in at 26,780 crore rupees, also down by about 8.5% on a YOY basis. But if we talk about the gross NPA and compare it on a sequential basis, that is expected to come in at 1.8%, 1.81% actually to be precise. That's compared to 1.83% in the previous quarter, whereas the net NPA, that is likely to remain absolutely flat at that 0.4% level. In terms of some of the key monitorables that we are watching out, margins, they are likely to witness a slight pressure. As we said, loan growth outlook is something that we'll be watching out for, given there's been pickup across larger banks. Asset quality, that is likely to hold up for the public sector major. And now we could also see some visible impact of ECL norms. So yes, let's watch out for that. So far, the street is penciling in a slightly soft quarter for SBI.
All right, let's watch out for that. But in some of the other earnings, all eyes will be on M&M as well. This time, the company is expected to come out with a stable set. Firstly, in terms of the volumes, we have seen a decent growth out there when the overall volumes did grow 16% on a YY basis. The automotive division's volumes were up 14%, but it's the tractor division that did very well. 32% jump on a YY basis in terms of the units sold is what the company reported. In terms of the mix of the automotive segment, yes, of course, the SUVs continue to dominate over there, but the share of EVs is seen to be rising. One of the factors that could impact the margins. This time, the auto EBIT margin expected at 8.7% versus 9.5% reported in Q2 of FY25. But the tractor division EBIT margins are expected to improve on a YY basis, and 19.3% is our expectation. The overall margin expected to be at 14.1%. And lastly, on the profit figure, we are expecting a number close to 4,049 crores. But of course, the commentary related to the new product launches, 27th November is going to be one of the other interesting days in terms of the new offerings. So more details on that is something that we will be watching out for. And the demand outlook specifically for the tractor division is something that we will be looking out for. So that's about M&M, but not just that, it's Indigo as well, which will be in focus on the back of its earnings. And this time around, we are expecting a revenue jump of 8% on a YY basis. The EBITDA is expected to be up by 9%, while the profit figure is expected at 152 odd crores. It's the lower fuel cost and a 12% growth in the passenger segment that's expected to help the overall revenue. The average fare is expected to fall by almost 2% on a sequential basis on a 1 month forward bookings in Q2. Maybe one of the factors that did impact the earnings projections, and the management's focus on the international expansions. What are the plans going ahead is something that we will be watching out for in terms of the management commentary. Along with that, the addition of the new networks and the code sharing agreements, more clarity on that is something that we will be looking out for when it comes to InterGlobe Aviation numbers.
All right then, all eyes on InterGlobe Aviation, but let's also put the spotlight back on the telecom sector. Bharti Airtel reported its numbers yesterday, and it was largely in line set of numbers that we have seen. Revenue came in at 52,145 crore rupees. That's up about 5.5% on a sequential basis. PAT too saw a growth of about 14%, coming in at 6,790 crore rupees on a sequential basis. EBIT margin, however, that was at 66%. That's down about 130 basis points. EBITDA, that was up about 6% on a sequential basis, coming in at 27,839 crores. So yes, EBIT margin, beg your pardon, EBIT margin has come in at 66%, whereas EBITDA margin, that stands at 56.7%. That's up about 40 basis points on a sequential basis. So yes, a largely inline set of numbers. ARPU, which is a key factor to watch as far as telecom companies are concerned, that has risen to 256 rupees for Bharti Airtel. Capex has come in at 11,362 crore rupees. As far as the India mobile revenue is concerned, that has seen a growth of about 13% on a year-on-year basis. Meanwhile, higher realizations and expanding customer base aid, they have also aided the growth for the company. So yes, a largely inline set of numbers is what we are seeing for Bharti Airtel, Srishti, and let's see how the stock performs today.
All right, definitely all eyes on Bharti Airtel, and not just with respect to the earnings, it's the board as well that has given an approval and a go-ahead to increase the stake in the Indus Towers with almost 5%. So that is something, the other development that we will be watching out for when it comes to Bharti Airtel numbers. The stock did close with almost a 1% jump. But other than that, it's Titan as well that has come out with its numbers this time around. The EBITDA was seen to be in line, while in terms of the overall margins, that was seen to be a big miss versus the estimates. And not just that, even the profit figure did come lower versus what we were expecting at ET now. The revenue has seen a jump of 25%, the net profit being reported at 1,006 crores. And yes, in terms of the margins as well, 9.8% is what the company has reported versus the estimate that was in double digits. The jewelry revenue was seen to be up almost 21%, while in terms of the carat lane, a 32% growth is what the company has reported. And even the emerging business, the sales stood at almost at 142 crores. So let's watch out for Titan as well. Not a great set this time around. 8 a.m. is when the company will come out with its con call, and more commentary on that is something that we will be watching out for. And on the channel as well, we will be talking to the management of Titan. So all eyes on that.
That's right. So all eyes on Titan, and let's see how that stock fares today in trade. But let's put the spotlight on the auto sector now. And R.C. Bhargava, the chairman at Maruti Suzuki, is saying that he expects 10% growth in the small car segment in the second half of this fiscal. Let's listen into what he had to say about the market share and more.
Half we will have a 10% growth. I'm sticking to that. In the small car segment, 10% growth in the second half of this year. Simple reason for market share growth is that our small cars will, as I'm hoping, will grow at 10% a year. The bigger cars are not growing at 10% a year. And there's only one other company in India which makes a sizable amount of small cars. They will also benefit and they will also grow faster. But the result is that the small car growth will drive faster market share growth for these two companies. And correspondingly, there will be some loss of market share for the other companies.
All right, so that's about Maruti Suzuki. The stock did slip with almost 3.5% in yesterday's trading session. So even the management commentary couldn't feel that excitement around with respect to Maruti Suzuki, given the fact that the